This is Beyond the Business.
For most of human history, air had no price. It surrounded cities, industries, and transportation systems without appearing anywhere in economic calculations. Factories burned fuel, power plants generated electricity, cars moved through expanding urban streets, and the atmosphere absorbed the consequences. But during the last few decades, something unusual happened. The air above us gradually entered the global economic system. Governments began measuring emissions, scientists developed methods to calculate atmospheric impact, international agreements created systems for managing greenhouse gases. And eventually, a new kind of economic unit appeared: carbon. Today, companies buy and sell carbon credits, financial markets trade emissions allowances, entire regulatory systems calculate how much pollution can enter the atmosphere. In effect, the world has created a new type of currency, not based on gold and not based on energy, but based on something far more unusual: the right to use the atmosphere. These units are usually called carbon credits or emission allowances, but in a broader sense, they represent something larger. They represent the financial value of the air itself. Before pollution could enter economic systems, it first had to be measured. Scientists developed accounting frameworks capable of calculating greenhouse gases emissions across industries and national economies. Carbon dioxide became the central unit of this system. Emissions could now be expressed in tons of CO2. This allowed governments to introduce pricing mechanisms. Today, many economies attach financial costs to emissions. In the European carbon market, the price of emitting 1 ton of CO2 has fluctuated dramatically. When the system was first introduced in 2005, carbon allowances traded at less than 10 euros per ton. By 2023, prices had exceeded 90 euros per ton. For large power plants emitting millions of tons of CO2 each year, this price translates into hundreds of millions of euros in annual carbon costs. Carbon had effectively become a new economic variable, a unit representing the cost of using the atmosphere. In 2005, the European Union launched the first large-scale carbon market in history. For the first time, the right to emit carbon dioxide became a tradable asset. This system, known as the European Union Emissions Trading System, regulates emissions from thousands of industrial facilities and power plants across Europe. Together, these sectors represent roughly 40% of the European Union total greenhouse gas emissions. Within the system, companies receive or purchase allowances that permit them to emit a specific amount of CO2. Firms that reduce emissions below their limits can sell unused allowances. Companies that exceed their limits must purchase additional permits. This creates a market. Today, the European carbon market alone generates tens of billions of euros in trading activity every year. Similar systems have appeared elsewhere. California operates its own cap and trade system. China launched the world's largest carbon market by volume, covering thousands of power plants. Through these systems, pollution has become a tradable commodity. The atmosphere has entered the balance sheet. Alongside regulated carbon markets, another system has developed: the market for carbon credits. Carbon credits represent emissions reductions achieved somewhere else. For example, a reforestation project in the Amazon may claim to absorb carbon dioxide by protecting forest land from deforestation. Companies thousands of kilometers away can purchase their credits to offset emissions produced by factories, logistics operations, or airline flights. In 2021, voluntary carbon markets exceeded $2 billion in annual transactions, with corporations purchasing credits to support climate commitments and net zero pledges. The system continues to expand. Financial institutions, technology platforms, and investment funds now participate in this market. Atmospheric impact has become a financial instrument. Yet the system has not always worked as intended. One of the most controversial examples occurred in the early years of carbon credit markets. Certain chemical factories produced a refrigerant gas known as HCFC-22. During production, a highly potent greenhouse gas called HFC-23 was created as a byproduct. HFC-23 is extremely powerful. It has warming impact more than 14,000 times stronger than carbon dioxide. Because destroying this gas prevented massive emissions, companies were eligible to receive carbon credits for eliminating it. But this created a perverse incentive. Some factories increased production of HCFC-22 specifically in order to generate more HFC-23. Destroying the gas produced large numbers of carbon credits. Those credits could then be sold in international markets. In some cases, the profits from selling carbon credits exceeded the profits from the chemical production itself. In other words, pollution has become financially valuable. The system was eventually reformed, but the episode revealed how complex carbon markets could become. Carbon dioxide is not the only greenhouse gas affecting the climate system. Methane, nitrous oxide, and other gases also contribute to warming. Methane provides a striking example. Over a 20-year period, methane can trap more than 80 times as much heat as carbon dioxide. Because of this, international climate frameworks increasingly convert different gases into a common metric known as the CO2 equivalent emissions. This allows policymakers to compare multiple atmospheric pollutants with a single accounting system. What began as a carbon accounting is gradually evolving into a broader system for managing atmospheric impact. Seen from a wider perspective, carbon credits and emission allowances function like tokens. Each represent a unit of atmospheric usage. Companies buy them, markets trade them, governments regulate them. Some platforms have even experimented with turning carbon credits into blockchain-based assets. Projects such as the Token Protocol and KlimaDAO attempted to convert carbon credits into digital tokens that could be traded on decentralized financial markets. These experiments remain controversial and are still evolving, but they illustrate something important. Humanity is slowly building a financial system around the atmosphere. What began as a carbon pricing may evolve into something broader. A system where multiple forms of atmospheric impact are represented by tradable units. In that sense, carbon credits may be only the beginning. They may represent the early stage of something larger, air tokens. The expansion of these systems has accelerated under international climate agreements. The Paris Agreement brought together more than 190 countries committed to measuring and reporting greenhouse gas emissions. National governments increasingly integrate emissions into accounting, into economic planning. Corporations track emissions across global supply chains. Investors evaluate companies based on climate disclosure metrics. Atmospheric impact is no longer treated solely as an environmental issue. It has become part of economic governance. In effect, the sky has entered the accounting system. Despite the rapid growth of carbon markets and climate accounting, an important question remains. Carbon credits and emission allowances exist primarily as a financial instrument. They appear as numbers in regulatory systems and financial market. But the atmosphere itself remains as a physical system governed by chemistry, physics, and biological processes. Markets can influence behavior, they can change investment patterns, they can make pollution more expensive. But they don't directly remove gases from the atmosphere. The climate system responds only to the total concentration of the greenhouse gases in the air. And this creates a fundamental tension. The financial system operates through prices, and the atmosphere responds only to physics. Over the past few decades, humanity has built an increasingly complex system for managing atmospheric pollution. Carbon markets, emission trading systems, and the climate accounting frameworks attempt to integrate the atmosphere into economic decision making. In many ways, this represents a remarkable transformation. For the first time in history, the air itself has entered the global financial system. Today, carbon pricing mechanisms influence emissions associated with roughly one quarter of global greenhouse gas emissions. Never before has a natural system been integrated into economic governance at such a scale. And yet the effectiveness of these mechanisms remain uncertain. If atmospheric pollution becomes primarily a financial instrument, there is always a risk that the system begins to optimize for economic outcomes rather than environmental ones. Markets are powerful tools, but they don't guarantee environmental results. The question, therefore, remains open. Have we created a system capable of protecting the atmosphere? Or have we simply created a new market around the air we all depend on?